Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Monday, the 28th of February. Starting off with AFC Energy, where it looks as though we might have an opportunity here near the lows with the bear trap that we had from the end of the end of this month, just last week, below the old January support there at 30.5. Above that, we're looking for hopefully a return to initial January resistance at 45 pence plus. The reason for being more confident that there'll be a lasting turnaround here is the bullish divergence line, so the RSI rising against that falling share price, and at least with an end-of-day close above 33.5, that broken November resistance line, looking for the mid-40s over the next 4 to 6 weeks, something like that. Moving along to a stock which doesn't get much airtime, but here it is today. We've got Base Resources, and looking at this, we've got a rising trend channel from, I suppose that summer of 2019, top of the channel there going towards 25 pence. That could be hit over the next 2 to 3 months if we keep above the floor of the channel here at 16 pence and head up, hopefully breaking the 1 year resistance around 17, 18 pence, which has been in place and quite sticky over the recent past, but 24, 25 pence over the next 2 to 3 months. Possible there at Base. Stock which is looking rather better than one might expect in current market conditions is Bizant. Here we've had that sideways shuffle along the 50-day moving average for January, bouncing above the 50-day line, now rising at 0.15 or so, and bull flag either side of the 200-day moving average at 0.18. View here is that above the 50-day line, looking for the June resistance line projection as high as 0.27. Maybe over the next 1 to 2 months as the shares gradually gather momentum. The momentum provided by that uptrend line in the RSI window, which has just been bounced off around the RSI 48 level, so that could deliver some decent moves over the near term. No such doubts with Benz Creek, which has been one of the performers of the year to date. Not much competition perhaps, but we gapped up last week, back on Friday, which is quite an achievement, I suppose. Held the gap, and above that gap top at 58 pence, looking for an eventual target here over the next maybe 2 to 3 months as high as 90 or 95 pence, which seems rather ambitious, but that's where the rising trend channel is from back at the beginning of the year. So let's see if 58 pence holds, and we can push higher for Benz over the near term. Another big winner so far this year has been Cloudbreak, which hopefully I will get the right chart up there. Here we've had the massive move up from 2 pence to around 12.5. The levels here was basically 5 pence, 9 pence, and then obviously the peak at 12.75, and then heading up to the top of that rising trend channel from the end of November as high as 17 pence, so above 9, looking for a retest of 12.5 or so, but a big picture target maybe over the next 2 to 3 months as high as 17 pence at the top of the late 2021 price channel, so watch out for that. On to EQ Tech, which is a bit like AFC Energy, I suppose, at the moment. We've got a rising trend line in the RSI window, so the bear trap reversal. Also had a gap close, which was on Friday, so we gapped down below the prevailing support there at 0.77, then closed above it on Friday, so that's another extra signal there. And obviously we've broken that line of resistance there from back in January around 0.82, so above 0.82, looking for a retest of the low 1 pence area, so maybe up to February resistance around 1.1 pence as soon as the end of next month. So looking reasonably well set there for a recovery off the lows. On to Geiger Counter, which underlines the expectation that non-gas energy sources might come back into fashion. Here we've got a situation where the shares have broken that line of resistance and the 200-day moving average around 48 pence on Friday, and above that we're looking for at least the January resistance at 59 pence over the next couple of weeks or so, and can also already start to dare to dream of a retest of November resistance at 72 pence maybe by the end of next month if we get a decent bit of momentum behind the situation. The fact that the 50 and 200-day moving averages are both rising is a definite plus at the moment. Stock which has been in a bull trend for quite a while, Hurricane Energy. Just wanted to cover this again. 8.3 pence is the resistance line there. We need an end of day close above that to deliver a fresh leg to the upside, and 12 to 12.5 pence at that August resistance line projection. But maybe wait for 8.3 pence to be broken, especially in current market conditions. iGas hasn't been around here for quite a while, but here it is now. A great break of that. I suppose it's a cup and handle, really, that saucer shape that we've got, or we've had since the end of September. Gapped higher on Friday, broke resistance and the neckline resistance around 19 pence today by quite a margin. And we're looking towards 32 pence over the next month or so, which is an April 2021 resistance line projection. So looking pretty strong there, and backed by that uptrend line in the RSI window, which should ensure that we have decent momentum over and up and above the two recent gaps to the upside that we've had for the share. So that looks pretty well set in stone. Moving along to i3 Energy, which has been an oasis of stability over the recent past. And in fact, we're going to new highs here. I've been calling 28 pence for quite a while. In fact, now that resistance line there from the early part of last year is heading through the 30 pence level, so 31 pence possible, maybe as soon as the end of next month, and especially while we hold above recent support around 18 to 19 pence. So that's a pretty impressive situation. It looks as though momentum is gathering there as well, which is always a good thing to see. On to Petrometad, which covered quite recently, but bit of fun here with the bear trap rebound that we've had below 3 3/4, above 3 3/4, and the 50-day moving average. Looking for the that line of resistance from back in November. If I can get it drawn correctly, that's heading towards 6 pence, and that could be seen as soon as the end of next month while we hold above 3 3/4 pence. And the latest bear trap gap reversal, we had a gap down on Friday, in fact, so we've closed that gap. An end of day close above 4 pence would be a gap close buy signal, and hopefully ensure 6 pence is on its way in a matter of weeks. Nostraterra, a stock which maybe doesn't produce as much oil as some of the biggies, but gapped up today and heading ever closer to the top of that broadening triangle from April, as high as 0.58. Maybe that could be seen over the course of March. Upside valid while we hold above the 200-day line at 0.41, and ideally there's no mid-close back below 0.45, which was the last support for the shares last week. Good to see Pure Gold. When we finish off with the Pure Gold, starting to stretch out nicely. We've got a rising 50-day moving average. We're shuffling above that at the moment as well. So all we need now really is an end-of-day close above the existing February resistance. It's 47p. We can do that. It should be up to 60s or the low 60s, which is the 200-day moving average, and also that line of resistance from October. That's it from me today. More updates tomorrow.